What is up, guys? Today we are doing a follow-up video where I follow Meet Kevin's investing advice and I see how it turns out. The last video I posted on this was 6 months ago, and at that time I had been following his advice for 6 months, both stocks and real estate, where I shared my portfolio. My total stock market portfolio then was almost $3,800. Of that $3,800, I put in $1,900, which meant I had an $1,800 paper profit, which was about a 95% return on my money within just that short period of time. Then I also bought real estate like he recommended, a wedge deal, in which I showed I also had a 95% return on my money. So in this video, this is now 6 months after I posted that video, or in other words, a total year of following this advice. And we're gonna see where we're at now, because things have changed quite dramatically, and I think they're going to continue on this pattern. So we'll continue with these updates if you guys like them. But we're gonna dive in first this time, looking at what's changed about my real estate investment. To recap on the real estate investment, almost a year ago, about May, 2020, I bought my first house. Bought a wedge deal for $277,000, wait for it, $500. I put 3% down, but a lot of times people don't like to talk about this. There's also closing costs, so it wasn't just a 3% down. So all in all, with closing costs and down payment, even though it was only 3%, I still had to come out of pocket almost $20,000. Rounding up in this instance, it was about like 18, but still a lot of money. But then I also had to fix up the property. Now I did most of the work myself. Originally in the first video, I said the fix up was 20 grand. Well, I still have a few more items that I need to continue fixing up, and I've realized it's actually gonna come out to about 25,000. Right, so now we're all in on this property for $45,000. My mortgage balance right now is $266,000. So now what is the property worth? That's the other thing that has changed. As we all know, the market has been booming, and when I originally bought this place, I thought it was between $330 to $350 on the higher end. Well, now I am definitely going with at least $350, and here's why. I mean, the market has been going crazy. My neighbor, literally right behind me across the street, just sold for $400,000. Now, mind you, they are a little bit bigger than my house here, but we have another property towards the front of the neighborhood that is the exact same size as this one, and they just listed for $400,000. So I'm curious to see what they sell for. And we have one right across, I'm a corner lot, so right across on the other side of the street, we have another property that someone bought in all cash, and it was a fixer-upper. So I know that this is gonna be a flip. They're fixing it up right now, and I'm really curious to see what they end up selling for. But they paid more for their property than I paid for this one here. And we're both the same size, we're on the same street, and in fact, they paid all cash. Maybe they don't sell for 400, but maybe they sell for 380 or something. And that's gonna bump me up even higher than this 350 ARV that I have now, but we're for sure going with 350 now. But the other thing, and this is gonna tie into stocks here, this is really the major changes. I took his advice on taking mortgage forbearance, which I started in January. So now I'm taking what would be my mortgage payments and I'm putting them into the stock market. And I'm gonna be doing a full year of that. Basically all of 2021, I'm not making any mortgage payments. It's all going to the stock market. And so right now, we're on 3 months of doing that. Just put in my March payment into my stock account. So we're gonna take a look at that now and see how that's grown or differed and what my return is so far. So we're gonna be doing a full year of that. So it's gonna grow the stock account massively. Bear with me now, we're gonna go through each individual stock, and there's a lot of them. So I had to take notes, I'm gonna have to read off of this. So please forgive me. But I'm gonna try to go somewhat fast because there is a lot of them. The first one is Tesla, which makes up 47% of my portfolio. And I have a profit in Tesla of about $29.75 or a 200% return. I'm also gonna, when you see these screenshots, they might be a little bit off from what I'm actually saying on here. And that's because I didn't take the screenshots at the same time I wrote these down. I did it in the same day, but not at the exact same time. So there might be a little fluctuation in what you see on the screen. And also, towards the end of writing all these down, I kind of got tired of it, just started rounding. So they're not gonna be exact as to what I'm saying here. Just an FYI. Next stock is Lemonade. That's 2.8% of my portfolio, and it's made me $77, and that's a 40% return on my money. Rocket Mortgage is 2.2%. That has made me $13.57, which is about a 7% return. Rocket has just been slumping. It has not really been moving. Redfin, another big gainer. That's 3.25% of my portfolio. That has made me almost $70, and that's a 29% return on my portfolio, or on my money. Shift is 6% of my portfolio, and it's lost me $8. It's down 1.3%, but look, Shift is one that Kevin believes is big. I've looked into it. I also believe is big, so I'm putting a lot of my money into there, and I actually want it to kind of stay down for the time being because, again, I'm putting my mortgage payment into there every month, but the more mortgage payments I can get into Shift, when it does go up, the more profit I'm gonna make on that. So I'm okay with it not moving right now. It's fine with me. EXPI is 3%, and I've made $122 on them, which is, ironically enough, just a 3% return on my money I put into there. Dropbox, 0.59% of my portfolio. This is really one that I kind of got from Jeremy at Financial Education. This isn't a Meet Kevin really recommended stock here. 0.59% of my portfolio. It's made me $3.87, which is about a 7% return. Shopify, 2.75% of my portfolio, which has gotten me $28, and which is about a 12% return. Wynn Resorts, this again isn't really a Meet Kevin one. This is more of a financial education one. It's 0.5% of my portfolio. It's gotten me $14.41, which is a 43% return on my money. And something I'm thinking of right now, guys, is, if you guys would like this, let me know down in the comments below, but I might do a comparison where I create an account where I just follow Jeremy's advice at Financial Education, all of his stock advice, whatever stocks he's saying, hey, this is what I'm investing in, these are my top picks, and I just follow his advice, and then I also follow Meet Kevin's advice, and we see which account does better over time, right? We do a review in 6 months on it and a year on it, and we just keep on tracking it to see who ends up making more money. Let me know down in the comments below. I guess if I get at least 5 comments, which is kind of decent for my channel, saying, hey, I want to see that comparison between Financial Education and Meet Kevin, I'll consider it. And if I get at least 10 comments saying that, I'll definitely do it. So let me know down in the comments below. But let's keep going. Zillow, that's a 0.45% of my portfolio. It's made me $17, which is a 69% return. Etsy, another one that I really believe in, and so does Kevin, 4.7% of my portfolio. It's made me $49, which is a 12% return. Apple, 0.3% of my portfolio. It's lost me $1. I should honestly probably buy more. It's just gone down a lot. It's taken a beating. But I'm really more looking for those growth stocks, which is why I really haven't put more money into them. But they're down 3% on my money. Purple, 0.09% of my portfolio. It's made me $2.70, but it's been a whopping almost 50% return. Who would have known? This pillow company. Microsoft. This isn't one that Kevin or Jeremy recommended. This is one that I bought myself when the market originally crashed back in February 2020. That's 2.4% of my portfolio, $69 and 43% ROI. Disney, another one that I bought, not based on their recommendations, made me $73 and 63% return. Facebook, again, another one here from your boy, 2% of my portfolio. It's made me $72, 39% return on my money. And DocuSign, 0.06%. It's made me 20 cents, and it's a 4.27% return on my money. Nano Dimension, this isn't one that Kevin invested in, but he did talk about on his channel. And I just put a little bit of money in there, 0.07% of my portfolio. It's made me $2, and it's been a 40% return. Sure wish I put more in there. Tattooed Chef, this is big on both sides, Jeremy and Meet Kevin, but bigger on Jeremy's side for sure at Financial Education. It's 3% of my portfolio. I'm down $50, and it's down 14% on my money. Square is 2.3% of my portfolio. $8 is what it's made me, and it has been a 4% return to the backside. Enphase, 3.4% of my portfolio, down $12, down 3.6% of my money. Wayfair, 1.5% of my portfolio, up $6, down 5 or up 5% of my money. Neo, 0.88% of my portfolio, down $16, down 16%. CCIV, 1.7% of my portfolio, down $11, down 6%. GHVI, that's that Matterport one Kevin's talking about, 1.22% of my portfolio, made $7, up 7%. PLTR, Planeteer, 1.2% of my portfolio, down $7, down 6%. And now the cryptos. Bitcoin, 3.6% of my portfolio, made $1 and 0.5% return on my money. And ETH, 1% of my portfolio, down $13, down 12%. Now my total stock market portfolio, I forgot to mention this, is $9,787. It was up to like $11,600, but at the time of me filming this is when like the market's crashing right now, here at the end of February. Of that money, I put in $6,197. Again, a lot of that's coming from the mortgage forbearance stuff. So my total paper profit here is $3,590, which is a 58% return on my money. Now there's a couple areas where me and Kevin sort of differ here in stocks. I don't pick every stock that he recommends. It's like I didn't invest in Peloton just because I don't know if I really like Peloton long term in the future. I'm somebody who likes to work out a lot, and I just personally would never buy a Peloton. I would rather build a home gym for that price than buy a Peloton. I don't know. I think it's more of a COVID play, but he's made great money off of it. Another area where we differ is with Bitcoin. Kevin's more looking at Bitcoin as a swing trade. He's got a decent amount of money in it, but he's more looking at it as of right now, it could change, but he's basically saying he thinks Bitcoin's gonna go up a lot when the inflation reports come out these next couple of months. And it might go to 100, 150K, and then he's gonna sell out of Bitcoin. I look at Bitcoin more as a long-term play. This is something where I think, look, this could go to $1 million, $5 million, $15 million a coin, potentially. And so I'm just gonna diamond hand this thing. I'm not selling even if it goes to 150K. And another thing that I've noticed with Kevin lately is he's starting to drift more towards liking stocks over real estate. So now where do I stand on this? Do I agree with that? After fixing up this house, realized, man, real estate is a lot of work, But one of the greatest things that I saw was a comment on Facebook. I think this applies to everyone right here. And it was asking, what is better, compound interest or leverage? What do you think is more important? And this comment right here nailed it on the head. They said, leverage if you don't have a lot of money, compound interest if you do. And I think that's so accurate, right? There's a reason why would somebody invest in real estate when it only gets them a 3 or 4% return versus stocks, which might get you an 8% return if you're just tracking an index. The reason why is because you're not getting 3% on the money you put in real estate, you're leveraging up and you're getting 3% on the asset value of real estate. So that 3% on real estate is higher than the 8% you're getting in the stocks. But over time, compounded over time, that 8% in stocks will catch up and will end up being more than the 3% on your real estate. It will over time catch up. But what real estate allows you to do is it allows you to get ahead a little bit faster, right? If I put my money into stocks first and I'm getting the 8%, it's just a slower game. Just like how Warren Buffett started investing at, I don't know, I think 12 or something, and the bulk of his net worth didn't come until he was like 50 years old. Stocks are just a long-term game in the compounding interest sector if you don't have a lot of money to start with. But what the real estate allows you to do when you start early is it just allows you to build your net worth faster and bigger. But over time, right? Real estate's here, the return because of the leverage, but over time, that compound interest is gonna catch up and exceed it. So real estate, I mean, look what it's allowed me to do. It's allowed me to, one, get instant equity day one by buying a fixer-upper. It's allowed me to take mortgage forbearance, which is allowing me to put more money into stocks. It's gonna allow me to refinance this place or get a home equity line of credit and use that to buy more. So it's good in the initial beginning for building your wealth, but I think there does come a point where, look, once you've got enough wealth and real estate takes a lot of work, and once you've got enough money to where, look, that 8% is just better than what you can get on real estate, it just does make sense to go for stocks. And that's why I see Kevin is going for stocks now. He's just past that real estate point. Me, myself, I'm not. Most of us probably watching this video are not. Real estate does make more sense. And I think the greatest ROI when it comes to real estate is really bank hacking. I mean, if you can just get in and maximize that leverage, only have to put 3.5% or 5% down, that's huge. And now the last thing that I'm taking into advice from you, Kevin, is trying to build a side hustle, trying to make more money. Like, guys, I have done all of this here on just an average level salary, just making $50,000 a year. And now my net worth is at almost 150K at the 23 years old at the start of 2021. So, but I'm kind of maxed out here. And you see, I mean, look how Kevin's been able to grow his wealth. A lot of it has to do with the income that he's making. I mean, income is huge. So that is why I became a real estate agent again back in October. And I am just looking here to increase my income and grow my wealth. And look, if that didn't work out or I didn't like real estate, I would look into the Matterport business that Kevin recommends. So I think this is going to explode, especially with this mortgage forbearance and with me buying in the dip right now. It's gonna be very interesting to see where things are and to see if this real estate business takes off and I can start making more money to dump more into stocks and real estate. We shall see, guys. But yeah, stay tuned for more updates. Let me know down in the comments below what you guys think, and if you're not already subscribed, please subscribe.